Good morning, everybody. It is 8:11 a.m. It is April 4th. It is Friday. Boy, oh boy, this market is finally basically capitulating. People are throwing in the towel after yesterday because usually this market bounces back a little bit, and this just took a dump. This is pretty crazy. The VIX is at a 41 right now, so there's a lot of fear out there. All right, crude is just getting slammed, and the 10-year yield has dropped 3.5%. So, this is pretty serious. Okay, this is pretty serious. All right, so we'll get all into all levels. We got still got non-farm payrolls and unemployment today. Not sure what that can really do to the market because it's sold off so much already. Then we have Powell talking. Boy, he's probably going to get asked a lot of questions about these tariffs. So it is jam packed today. So we'll look at the data at 8:30 together live, and we'll just look at some levels. I actually had to go back in futures and actually go back 500 days to even get some new levels. So that's where we are. I had to go back 500 days. So I haven't had to do that probably a couple of years to actually look back that far. So that's where we're at with this market. So without further ado, let's get into it. My name is Steven Gonzalez. I use market profile and volume profile to find structure in the markets, along with gamma exposure level, supply and demand, the most traded price of the year, the month, the week, and the previous day. That is my edge. That's how I look at the market, and hopefully I can share that with you. Now, it'd be great, it'd be awesome if you guys could join me every morning while I talk about the markets. Okay, join me, subscribe as I give you the story, the market news, the leaders and the laggards, economic calendar, and then we go over some long and short trade scenarios. That's when I analyze the futures market, ES and Nasdaq. Okay, so hopefully you enjoy it and you can smash that like button. All right, now I think we can get right into this watch list. See what's driving these markets. All right, because this is pretty insane. All right, not sure if I put this up yet or not. All right, it looks like obviously the VIX is up 35.24%. Wow. It's at 40.60. That is insane. That means that the volatility today will be crazy. Okay? 30-year bonds. 30-year bonds are being bought. They're up 1.57%. Fear, I think, has finally reached this market. Bitcoin actually is up 0.63. Dollar is flat. Ether down 0.20. Gold down 0.28. ES down 2.82. Nasdaq down almost 3%. The Dow is down almost 3%. Silver is down 3.33%. 10-year yield is down 3.4%. Russell's down over 4%. Crude down 7.53%. Crude is at $61 a barrel. That gas will definitely be cheaper. And with this 10-year yield dropping, it will definitely help mortgage rates. Okay? And people are buying bonds. All right? This is insane. All right? So let's just look at this Mag 7 Plus here. All right? We'll look at this together. Now, you notice something. I have IV percent on the far right of those columns. Okay? It's at 100% in Apple. So that just gives you an idea of how volatile these markets are. And why is that not? Hold on a second here. Here we go. I'm just making sure all my charts are good. All right, so we do this now. All right, so Netflix is down the least, down 2.40. Why don't we go over the 4 percenters? GE down 4%, Meta down 4.32, AMD down 4.34, JP Morgan down 4.50, Apple's down 4.57, Broadcom down 4.8, Boeing down 5.12, Tesla down 5.90, Amazon's down 6.08. That is the laggard today. Let me get rid of these. All right. Now let's look at our sectors. All right, let's see how bloody this is here. All right, so utilities is flat. Utilities is flat. Then we have staples. This is going to be no surprise. Defensives are going to be the top of the list, only down 0.39. Real estate down 0.61. Healthcare down 0.86. Communications down 1.76. Industrials down 2.49. Basic materials down 2.61. Technology down 3.27. Discretionary down 3.68. Financials down 3.69. Semis down 3.92. And energy is just the big laggard. Okay. Energy basically is down so much because they're going to feel like if we possibly go into recession, there is not going to be a demand for oil. Okay. Pretty crazy. All right. Pretty crazy. Now let's get over to the economic calendar, some news. All right. All right. So today we got non-farm payrolls. All right. We are expecting 135,000 jobs added. Let's see what that does. Unemployment, we're expecting it to be unchanged. It's supposed to stay at, we previously have 4.1. Consensus is 4.1. Now we have Fed Chair Powell speaking at 11:25 a.m. Just adding to the crazy mix of today. Okay, then Fed Barr, then Fed Waller. Okay, so what a day. What a day. Unbelievable. Unbelievable day. Now, let's get into some news. So, China retaliates in global trade war with sweeping tariffs on U.S. goods. China announced additional tariffs of 34% on U.S. goods, the most serious escalation in a trade war with President Donald Trump. That has fed fears of a recession and triggered a global stock market rout. It's basically, I believe, why we're just getting hammered. Global rout in bank shares intensifies as recession fears mount. A global sell-off in bank shares turned ominous with a collapse in Japanese bank stocks to their worst weekly loss in at least 40 years, while U.S. and European lenders continued to decline. A fear of a global recession swept the markets. Fed's Powell to weigh in amid tariff fray, market drop. Okay, slow, steady U.S. job growth expected in March. Trump's tariffs, economic uncertainty fuel more settlements between CEOs and activists. As part of a growing trend, corporations and their agitators decide to find common ground amid prospects of a tariff war. Mass layoffs at U.S. government agencies and the increasing threat of a recession that is clouding the business outlook and weighing on stock prices, according to nearly a dozen investors, lawyers, bankers, and analysts. Okay, let's read this before the bell. U.S. stock futures declined, signaling more losses on Wall Street after China retaliated with additional tariffs of 34% on all U.S. goods. A day after the Trump administration sweeping levies knocked off $2.4 trillion from U.S. equities. Later in the day, investors will scrutinize the Labor Department, which is expected to show non-farm payrolls likely rose to by 135,000 jobs in March after rising 151 in the prior month. Additionally, focus will also be on Fed Chair Powell's speech for clues on the path of interest rates. Meanwhile, the Pan-European Stock 600 index slumped, putting it on course to confirm the benchmark is in a correction. In Asia, Japan's Nikkei closed down, registering its steepest weekly decline since March 2020, while Japanese banks posted their biggest weekly drop in at least 4 decades as U.S. tariffs spurred fears about the country's fragile recovery. In currencies, the dollar steadied. However, safe haven yen and Swiss franc continued to rise. Gold prices slid but remained on track for a fifth straight weekly gain, while oil prices were headed towards their lowest close since the midst of the coronavirus pandemic in 2021. Okay, so let's see here. Anything into the street? Okay, let's look at Alphabet. TD Cowen cuts target price to 195 from 210. Nike, Bernstein cuts target price to 85 from 95. All right, let's look at some other news here. Alibaba stock fell 9.6%. PDD Holdings dropped 9%. Baidu fell 7.4%, and JD.com slipped 10% after China announced 34% tariffs on all imports from the United States. Companies with large exposure to China suffered badly, with Qualcomm down 6.1% and Caterpillar down 6.8%. Tesla stock slipped 6.4% after the first quarter deliveries fell to their lowest level in nearly 3 years, a miss that JP Morgan confirms unprecedented brand damage linked to the CEO Elon Musk's role in the Department of Government Efficiency. Apple stock slumped 5.5, continued to drop, given the iPhone maker's significant exposure due to its key manufacturing hub in China. Bank stocks tumbled as worries of U.S. economic slowdown grew. Morgan Stanley dropped 6.6, Goldman Sachs shed 7%, while Citigroup fell 6.2, and JP Morgan Chase slid 6.4. GameStop stock fell 1%, overturning earlier gains after CEO Ryan Cohen disclosed the purchase of 500,000 additional shares of the company, signaling a strong vote of confidence in the video game retailer's future. Stellantis stock fell 6.9 after the Jeep manufacturer announced the pausing production at two assembly plants in Canada and Mexico as the company intends to navigate the new round of automotive tariffs. All right, we don't need to go to the juice. I covered all the news already. We got about 8 minutes to tariffs, to the news, and we're gonna go to daily charts. Pretty crazy. All right, so let's go to those daily charts. All right, so we talked about yesterday. Remember, now yesterday we weren't yet through this anchored VWAP of 2024. Okay, you could see this anchor VWAP starts right at the beginning of January of 2024. You can see it was support, right? So this basically tells me the average buyer from the beginning of 2024 is underwater. So that's very significant, and we closed well underneath this level. Okay, so that's very significant. Just think about that. If you bought in January last year, the average buyer from the beginning of the year is underwater. Okay, that's very important to understand that. Okay, that's why these levels are pretty important, pretty significant. Where are we now? Unbelievable where we're at now. Okay, we closed the 536. We are 522 right now. We are all the way down here. 522. All right, if we zoom out, where's 522? 522 really lines up with here. Now the swing low right here would be around 510. All right, it's kind of the last time this anchor VWAP from 2024 was hit. Okay, this could be a place that we stop at 510 or the swing low here at 494. Okay, this is pretty nuts. Now, if we look at, let's bring up this axis. Okay, let's just go by yesterday's numbers. So at the bottom of yesterday, we are so far down 12.48%. Now 10% is correction, 20% is a bear market. Okay, we are at 520, actually 521 and a half right now. So let's see, just for instance, where we're at now. 521. Let's just do it from here. All right, let's just do it from here and see where we're currently at. That is about a 17.51% decline, is if we open the market right here where we are. 17.51%. Only about 2.5% shy of 20% bear market. Okay, very, very important. Okay, so that's that. Right now, let's look at futures, And you can just see under the hood exactly what the price action looks like. Whew. All right, so there's last month's lows. Those have been obliterated. Those have been obliterated. Okay, so we're bouncing a little. We went all the way down to, let's see, the low was 52.10 and a half. 52.10 and a half has been the overnight lows. Okay, that is pretty nasty candles. One, two, three. Okay, that's some pretty nasty selling. Okay, moving on to the Qs. Let's look at those Qs. Now, remember, the Qs have already lost 2024 anchored VWAP. Okay, and you can see that this day they moved all the way up to the 20-day moving average, but then gap below this, and look at that. Opened up right at last month's lows and closed right there. Okay, if you look to the left, that's what I was talking about the day before on 448, 450. We closed at 450.66. Where's price now? 437. We are down here. 437. So 437 lines up right around here. Really not 437 is like right here with these two daily candles. All right, we do have a swing low right there at around 423, and then I think a major support would be 413, 414. Okay, so pretty crazy. Now we're at 437, so let's just do the same calculation I did earlier. I just want to see around 437. So what would this be percentage-wise decline? We are at, whoa, my lord. We are at, currently from the all-time highs, 23.71%. That is a bear market in the Qs. That is a bear market. 23.71% if we opened where we are right now. That is a big decline. Okay. We could even do a fib here. Let's see. What's the retracement on this? From this level on 419. Yeah, we're past 61.8. We're, like I said, right around here now. So pretty insane. All right. Pretty crazy how fast this market moves when people are scared. We got data coming out in 30 seconds. I'll just leave you with what we're doing in the NASDAQ futures. We came down all the way down to 178.20. You can see how bloody this is. Now we'll move back over to the ES futures and we can look at the market's reaction. Let's look at the market's reaction to the unemployment data that's going to come out in about 5 seconds. Let's see what the market's reaction to. I mean, the market's, I don't know what it's going to do because it's so crazy. Right now, market just, all right, here we go. Data's coming in, 8:30. Let's see. Here's some large orders hitting the tape. Let's see when this rolls in here. There's not much movement in the market. I wouldn't think there would be as much just because we're just so sold off. Let's look here when as it rolls in here. Let me just refresh. All right. So, whoa. Wow. So, consensus was adding 135,000 jobs. We added 228 jobs. Big beat on that. Unemployment rate went up. All right. We were expecting 4.1, we got 4.2. Now, the only thing I can say with this, it's kind of conflicting, right? So we're adding more jobs, but we're getting more unemployment, right? So if the unemployment went and we missed the jobs, I could see maybe there's more cuts coming. Maybe they're going to start trying to cut. But this is like, oh, we just added these jobs. unemployment went up. So it's kind of mixed bag, right? Kind of a mixed bag. And if you look at the chart, it's kind of just, I don't know. You, like I said, you sold off so much that I don't know if what people are going to think about this. I really don't know. Okay, now if we go back here and we look at the Fed Watch tool, now that that came out, let's just go to the Fed Watch tool. I'm going to refresh this to see if they're pricing any cuts. Okay, so with that news, just earlier, a cut was only at like 30%. It raised up to 43.6, a quarter point basis cut expected for May 7th. Okay, let's see if we go to June. What does that show us? June expects a cut, quarter point, and now 44% of a 50 point break cut. Let's see what July. All right, in July, 53%. That would be what, a 50% basis point cut. Okay, so that's interesting. That just changed in front of our eyes. Okay, let's look at some other things here. I got my trusty. Wow, this is very telling about our market. Okay, so this is a nice thing to just look at. How many percentage of the S&P 500 stocks are above their 20-day moving average? Look at where we were on April 2nd. 63% of stocks. 63% of stocks were above their 20-day moving average. It took one day to make that 29%, and I'm sure it's lower now. That is pretty insane. Okay. Let's look at a different chart here. Let's look at the bullish percent index. That's one that's curious. All right, that moved down. That just means 37% of the S&P are on a buy signal. Okay, now new highs and lows, that should be definitely negative. Yes, look at that reading. Wow. Wow. So that's a lot more stocks making new lows. This wouldn't be shocking. Now look at this reading. This is the last time we were at this level was October of 2023, which was like the market bottom. It's going past that level. So the next big time we were down like that was September 2022. So this is not a good sign. All right, not a good sign at all. So let's look at the NYSE bullish percent index. Let's look at that. Actually, let's look at the NASDAQ 100. All right, only 29% on the buy. That would make sense. And we'll finish it off with the NYSE, which is the whole stock market, basically. New York Stock Exchange, 34%. All right. So, not very encouraging numbers there, right? All right. Now, let's go to futures. Now, this is going to be, oh, we're bouncing a little bit now. I'm going to be straight up with you. This is not going to be easy to trade this. All right. Let's just look at levels together. Okay. Give me 1 second here. All right. Actually, before we go, I want to look at the 10-year yield together and show you the devastation here because I've been talking about it. Here's the triple-headed monster here. Look at this, the yields fall. Remember I talked about if we broke 3.91, the structure's poor. All the way down to about 3.7. So this could just keep falling. Remember, this is the inverse of bonds. People are buying bonds. Okay. Now we go to the dollar. We're kind of holding steady at the 101. And go to our trusty fear gauge here, because this is fear now. Look at the high. It was almost 46 VIX. We're at 38 right now. Fear is in the markets, alive and well. Okay. Now I'm going to move over to the future, to my market profile, volume profile. Actually, we're going to start here. This is the ES, and I had to go back actually 500 days to see where we could be. Okay, this is the market now. You can see to the left where it found support almost to the tick was this swing low right here, 52.11. That swing low was support. Okay, so this is 500 days back. The next major level probably be around 50.58. You can see there's a high volume node here. Okay, you can see right here there's a little shelf. This could be support and resistance to the left as well. You can see right here. Okay, now let's look at the NASDAQ together. All right, so in the NASDAQ, where do we come down to? There's our support. We came now. See, we broke these two. This is pretty much almost like, wow, this should be support right here around 8. Let's call it even just 180.89 around that. I thought that would be support. That's where we're at now. But we actually went down all the way here. Okay. Looks like you have like a daily demand zone right here around 178.09. All right. So you're getting some buying coming in. All right. That's what's going on there. Now if we go to our market profile, our volume profile. So in big moves like today, we're gapping down pretty big. Okay. You can see we have demand down here. Okay, that starts at about 52.08. 52.08. Okay. You can see we're 100% net short, and we're kind of at the bottom third of this session. All right, so the levels you're going to mark off here in futures is 53.23 is the overnight's 50% retracement. Okay, and of course gap fill 54.28. Got some supply here. Okay, demand here. Honestly, I'm probably going to trade most likely SPX options to control my risk, because futures, honestly, the ATR futures is probably going to be insane. It could be probably up to 40 points every 5 minutes, 45. I mean, that's like, how do you even set risk on that? That's why I'd rather probably play with the options in SPX, because then it's like a fixed, I can really like have that fixed amount without having to worry about how many contracts. Okay, so to me it's basically all about how we move here. Okay, it's going to be all about the gap fill with the supply here, the 50% retracement of the overnight, and this demand down here. That's really it. Okay, it's gonna be crazy, violent. This is pretty much capitulation here, and there's probably farther to go down. Now, you're not going to go down every day like this, but this is the first wave. Now, markets are crazy, so who knows? This could be pricing in tariffs and we just go up from here. I'm not saying all-time highs. I don't know. But this is pretty significant. Like I just said, the QQQ is down 23% already. So this is very significant. All right. So let's just get right into it. I'm going to just do some scenarios here. This is all. Now, my internals today, because it's so volatile, they're important as far as the sectors, right? Let's just bring that up real quick. They're important. All right, let's look at these. So they're important always, right? But these boxes are probably the most important to me to see how this market's moving. But this, because we're going to be so volatile, this could be probably at a minus 400, would generally be very bearish. It could just go to zero within a drop of a hat. Okay, but I'm going to be really looking at how the sectors move today, right? But like I said, that can change on a dime. Structure will be king today. Okay, I can't rely on this as much because it can change on a dime with that volatility. Okay, so back to futures. All right, all right. So let's talk about scenarios here, and we're gonna go because we're down here. We're gonna go with the bear side. Okay, so we got our 50% retracement right here. Got very thin volume. Okay, on this way down as well. Okay, very thin volume. So you can, I told you already, we're 100% net short, but we're pushing up from the lows. So this should be pivotal. This 50% retracement, I believe that's 53.23. Okay, so what you want to see here, if you're a bear, what do we do when we come to this 50% retracement? Because you got thin kind of single prints here. If you get resistance here, boop, start to roll over, I believe we're going to go test those overnight lows in this demand zone. Okay, do we go farther down? I don't know. We've already come down so much. Okay, now what's the other part? Okay, you have supply and gap fill up here. If the market does start to push, 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 this would be the real test. Gap fill in this supply. If obviously be, I have big feather in the cap of the bulls if they could fill the gap. But what if you fill the gap and then it's like, all right, longs are out, and then I think we could fall, and I think we would probably hang out in here somewhere and build some value. Okay. All right, let's move on to bull side. As far as the bullish side, all right, you already popped off from down here. Okay, you already are taking some of this 100% net short in the overnight inventory, right? Because you're almost going towards the midpoint, the 50% retracement of the overnight. Okay, but it's wacky, right? So what could happen here? We could push up, get rejected, test these overnight lows into this demand. Now this could be possibly a bear trap. Okay, we come into this demand, pop out, start holding the higher lows, higher lows. This could definitely move back up to the midpoint and see if we can test that gap fill and the supply. Okay, so that's probably all I'm looking for if I think the markets can turn, but it's going to be insane. Okay, now let's look at the NASDAQ. So here's our NASDAQ. All right, let's look at some levels. It's kind of the same thing. You got gap fill here, be 186.64. You have supply. Most traded price of the overnight is up here as well. The midpoint is 182.6625. Oh, I'm using the wrong marker. Hold on. All right, let's do it again. So gap fill 186.64. What's supply? Okay, most share price at overnight as well. You do have single prints here. Okay, our mid 50% retracement is 182.66, and we have an overnight low, which didn't hit demand, but we're gonna put demand in here, just like the ES. Same thing. It's going to be pretty much repetitive of what I already said. Okay. The swings on each candle are going to be crazy. It's crazy. Okay. I did trade during the pandemic, and I have to be honest with you, there was weeks where I was like, I can't trade these futures. It was like so volatile. It was, your stops had to be so wide. So, like I said, I'm gonna switch to just doing SPX options today. So 0 DTEs, and I might not do anything today because it could just be crazy. Okay. All right. So 100% net short, pretty much as well in Nasdaq. Let me put up these scenarios here, and we're gonna start off with the bear side. Let's do it. Okay. Price is right here. Okay. So same kind of thing, right? If you're a bear and you start to go up into these single prints and you find resistance in single prints, that is bearish. Higher low, and I think we can go ahead and test that overnight low, 178.10, and try out this demand. Now about that demand, does it hold? If we start ripping through demand, that is not a good sign. Okay. How low can we go? We could probably put this up a little bit. There's some demands down there. I actually had to redo some numbers, and of course I just got rid of. Okay. Actually, I gotta do them again anyway. Let's just do them again. Apologize for that, but we know it's pretty easy. These are our levels, and we'll just include this here. Okay, and I just gave you some scenarios for the bear side, and like I said, this 176 about, we'll really have to see if we can crack that. If it cracks it, then we have demand here. So there is some demand below us, and we did come a far way already. So like I said, we have to see. Okay. Now, as far as the bull case, same thing as the ES, right? Now, first thing, I don't know if I put this in the scenarios here. If you come up here and start to hold in these single prints, you could definitely try to fill that gap, right? I kind of would rather have this happen though. Push down, take out the overnight lows, go into this demand, right? Go into this demand, and then boop, higher low, and see if we could start to move back up at least to the 50%. If we do and hold it, we maybe can go into this supply. Okay. But I really have to see if, we're really getting some buying now. We're almost back to the 50% of the overnight. And again, we could open up and just dump. Because if you think about it, if anybody got long yesterday and thought that this was a dip, the pop that as soon as they get open, the market opens and there's a pop, I'm out, and then we could dump. So we'll have to see. Okay. Because if you are, I know, long in this market and you thought yesterday was the bottom, and you're gonna want to probably get out on any kind of pop before there's any farther downside. All right, there we go. That will do it for me today. Hopefully you guys got something out of that. Like I said, the future should be absolutely insane. Please smash that like button if you enjoyed it. All right, now, as always, join your boy in the mornings. Give you the market story, the lowdown, the leaders and the laggards, the economic calendar, the market news, and I just gave you the long and short trade scenarios that I'm going to be looking at today. Okay, it's Friday. We have Jerome Powell still talking crazy. We just had unemployment and non-farm payrolls, which kind of was like a nothing burger because of this big down move. So I think we're just gonna keep having this wild volatility for I don't know how long. Because if China retaliates, what are we gonna do? And then I just think it's gonna be so much uncertainty that we probably go farther down. We might get a rally, but I probably go farther down because there's just so much uncertainty. The market needs to price this stuff out, and I don't think we know what we're gonna do. What is America gonna do now? Right? Are we gonna put farther tariffs? Are we gonna, I don't know. So it's crazy. It is definitely, definitely crazy. Well, anyway, everybody, no trades to trade. Stay green, and I'll see everybody on Monday. Take it easy.